Imagine waking up one morning to find that three companies you've been watching quietly turned a modest investment into life-changing wealth. While the world obsesses over the next shiny gadget, a quiet revolution in artificial intelligence is minting millionaires in the background. Today, we're diving deep into three AI powerhouses: NVIDIA, SK Hynix, and Palantir that aren't just riding the wave. They're building the entire ocean. And one South Korean giant's massive $26.5 billion move is about to supercharge everything for the AI kingpin itself. Stick around, because by the end of this video, you'll understand exactly why these stocks have the potential to print millionaires in 2026 and beyond. Stock No. 1, NVIDIA. The AI foundry king NVIDIA isn't just a graphics card company anymore, it's the foundry of the artificial intelligence age. What they do is design and sell the GPUs and full-stack platforms that train and run the world's most powerful AI models. From data centers to autonomous vehicles and even robotics, if it's cutting-edge computing, NVIDIA Silicon is likely at the heart of it. Why does this company matter in 2026 and beyond? Because the AI build-out is insatiable. Hyperscalers like Microsoft, Google, and Meta are pouring hundreds of billions into data centers. And NVIDIA's Blackwell and upcoming Rubin architectures are the must-have accelerators. Their dominance means they're not just selling chips, they're selling the entire platform that developers build upon. Switching costs are enormous. Look at the numbers. For fiscal 2026, NVIDIA posted a staggering $215.9 billion in full-year revenue, up 65% year-over-year. In Q1 fiscal 2027, they crushed it with $81.6 billion in revenue, up 85% from the prior year, with data center revenue alone hitting $75.2 billion, up 92%. Profits are off the charts too, with recent quarterly net income around $58 billion in one period. Gross margins remain elite, around 75%. This is scale at a level that was unthinkable just a few years ago. Major catalysts include the ramp of next-gen platforms, sovereign AI initiatives from governments worldwide, and enterprise adoption exploding beyond big tech. Their $80 billion share repurchase authorization signals massive confidence. CUDA software lock-in, years of lead in architecture, and a full-stack approach that competitors struggle to replicate. No one else matches their ecosystem. Long-term investment potential? Extraordinary. If AI continues its trajectory, NVIDIA could remain the central nervous system of computing for the decade. This is a compounder that rewards patience and conviction. But chips need memory, and not just any memory. That's where SK Hynix comes in, and their recent $26.5 billion NASDAQ move is a game-changer that's reshaping the supply dynamics for NVIDIA itself. Stock No. 2. SK Hynix. The memory muscle powering AI. SK Hynix is one of the world's leading memory semiconductor giants, specializing in DRAM and NAND flash, with a particular mastery in high-bandwidth memory that's absolutely critical for AI accelerators. They produce the high-speed, high-capacity memory that allows GPUs like NVIDIA's to process massive datasets at lightning speed without bottlenecks. Why does SK Hynix matter in 2026 and beyond? HBM demand is exploding due to AI training and inference needs, and supply is painfully tight. SK Hynix has emerged as NVIDIA's key partner in this space, with HBM3E and HBM4 leading the charge. Their $26.5 billion capital raise via NASDAQ listing strengthens their balance sheet for massive capacity expansion, directly fueling NVIDIA's growth while positioning SK Hynix as an indispensable link in the AI chain. Shortages are expected to linger into 2030, giving them sustained pricing power. Financials are eye-popping. In Q1 2026, they reported revenue of $57.63 trillion, up a massive 198% year-over-year. Operating profit hit a record $37.61 trillion, with a jaw-dropping 72% operating margin. This is profitability that rivals even the best in semiconductors, driven by premium HBM mix. Continued HBM ramp for NVIDIA's GB200 and future platforms, capacity expansions, and broader AI infrastructure spend. Their leadership in advanced packaging and modules gives them an edge. Technological leadership in HBM, scale as one of the big three memory makers, and long-term contracts with the biggest players. The AI tailwind turns their cyclical business into a more secular growth story. Risks include memory industry cycles, heavy capex needs, competition from Samsung and Micron, and Korea-specific geopolitical or regulatory factors. Supply gluts could emerge if AI demand disappoints, but current indicators point to tightness. SK Hynix is poised to be a core beneficiary of the AI infrastructure supercycle. As NVIDIA scales, so does Hynix. This is a leveraged play on the memory bottleneck that could deliver outsized returns for years. Stock No. 3. Palantir, the AI operating system for the real world. Now, let's talk software. Palantir Technologies builds powerful data analytics and AI platforms, primarily Gotham for government intelligence and Foundry Ape for commercial enterprises. They take messy, siloed data and turn it into actionable intelligence, using AI to drive decisions in defense, healthcare, manufacturing, and more. Why does Palantir matter in 2026 and beyond? Because raw AI models are useless without integration into workflows. Palantir's platforms make AI bootstrappable and deployable at enterprise scale. Their focus on commodity cognition and operational leverage is paying off big time as companies move from experimentation to production. U.S. Commercial growth is accelerating wildly. The numbers back it up. In Q1 2026, revenue reached $1.633 billion, up 85% year-over-year. U.S. Revenue surged 104%, with U.S. commercial up 133%. They raised full-year 2026 guidance to around $7.65 billion. Adjusted operating margins are elite at 60%, and they're generating strong free cash flow. TTM revenue is over $5.2 billion. Deep domain expertise, proprietary ontology-based approach to data, high switching costs due to mission-critical deployments, and a culture of relentless iteration. They're the N of 1 in applying AI to complex operations. High valuation multiples, dependence on large deals, potential government budget shifts, competition from open source or big cloud providers, and execution risk as they scale commercially. Stock-based compensation remains a factor, though margins are expanding. Long-term investment potential is compelling. Palantir is transitioning into a high-growth, high-margin software powerhouse with network effects in data platforms. In a world where every company needs an AI operating system, Palantir is uniquely positioned to capture value. NVIDIA, SK Hynix, and Palantir represent three interlocking pieces of the AI ecosystem: the compute engine, the memory enabler, and the intelligence layer. SK Hynix's $26.5 billion capital infusion strengthens the entire chain, ensuring NVIDIA has the supply it needs while giving Hynix firepower for the long haul. Together, they're not just participating in the AI revolution, they're enabling it at scale. This isn't about short-term pumps, it's about structural, multi-year tailwinds backed by explosive financials and real technological barriers. Of course, do your own due diligence, size positions appropriately, and remember, markets can be volatile. But for investors with conviction and a long-term horizon, these three have the ingredients to create significant wealth. If you're excited about the AI future, which of these resonates most with you? Drop your thoughts in the comments, smash that like button if this breakdown delivered value, and subscribe for more deep dive stock analysis. The Millionaire Maker machine in AI is just getting started. Don't watch from the sidelines. Until next time, stay invested, stay informed.